friends, welcome to Nirmal Bang. I'm Piyush Jain, and today I'm going to bring you a new corporate conversation around a company which is bringing out its IPO. It's soon going to get listed on the bourses. The name of the company is Bluejet Healthcare Limited. It's a specialty pharmaceutical and healthcare ingredient company. Let me now welcome the management on the show. We have the Chief Operating Officer, Mr. V.K. Singh, and Mr. Ganesh Karupanan, the Chief Financial Officer. Gentlemen, welcome to the show.
Thank you, Piyush.
It's almost like a tradition, sir, that we normally start the show with an effort to know more about the company. As it's an IPO, it's the listing which is happening. So I think, Mr. Singh, let's start first about knowing about the journey, when actually the company really started its journey, how it has been, what is the sort of business model of the company.
So, the company started about 5 decades back in 1968. This was started by the father of the current chairman of the company. And one of the first products that the company started with was an artificial sweetener that's called saccharin. As the company advanced with that business, they added a new line of products which were in the segment of contrast media. So the company started making the basic building block for contrast media, and also then augmented it by making the advanced intermediates for contrast media. To understand what contrast media is, that they're basically dyes that are injected into the body when a patient is prescribed a CT scan or an X-ray or an MRI. So they basically do the job of enhancing the image of the organs or tissues and helping diagnostics by trying to pinpoint the lesions in the tissues or in the other organs of the body. So that's the basic function of the dyes when they are injected into the body. So having done that, the company then, there was another third vertical of the company, that was the pharma intermediate vertical. And we got some very good successes in the third business vertical, that is a pharma intermediate vertical. In the course of the journey, the company started, with a legacy unit, that was Unit 1 in very close to Ambernath in Maharashtra. And then they added Unit 2, which is a flagship unit of the company, which has got a US FDA approval. And then they added more capacity in Unit 3, which is located in Mahad, and we acquired a greenfield unit, which is we call Unit 4, which is also very close to Ambernath, close to Mumbai. Unit 3 got a US FDA approval. That's, as I mentioned, is a flagship unit. Over the last few years, we have shown an extremely good growth CAGR. If you look at the numbers, top line numbers, starting at 521, we have shown a growth CAGR of about 20%. So the company is in, let's say, 3 product verticals. These are very, very niche segments. They are into, you will not find too many peers for the company in these particular segments, in a very, very sticky part of the business. Predominantly boutique, pure play CDMO with bench to bulk capabilities. So right from milligrams to industrialization, we can service our clients. And that's broadly about the evolution of the company.
That's pretty informative. I think let's actually talk about the numbers here. I think for our viewers, the revenue in FY21 was around 500 CR. Then it grew to 683 CR, and then actually it grew to 720 CR in 2023 financial year. So the growth actually has been quite consistent. Let's try and understand from the point of view of blended utilization. Mr. Ganesh, where we are right now on the perspective of utilization across all plants on a blended basis?
In terms of capacities?
Yes.
Today we are actually like 70% our capacities are utilized. Today predominantly contrast media accounts for 70% of the total turnover. Obviously the production also almost 70% goes to contrast media, followed by saccharin, and the emerging market business, PI, API takes the third spot actually.
Right, sir. And usually, when do you actually need new capacities? Is it something where if it crosses 80%, you actually start building up? Like how it happens?
We at this point of time, we are already expanding our capacities. We are putting an additional block in Ambernath, Unit 2. We are also reconfiguring Mahad with additional 2 blocks. All these new capacity additions will go live in FY25. We expect by Q1 of FY25, these facilities will go live. And this would actually like increase our existing capacity by at least 50%. Today, we operate 1000 KL, and we should actually like increase our capacity by another 50%.
These are brownfield expansions?
One is a brownfield, both are brownfield.
Then I think the capex is going to be less compared to the fresh unit. What's the total amount of capex which is going to be used? And I would believe that some starting actually would have started investing, but then obviously the fund proceeds which would be coming from IPO will also be used there.
No, the entire IPO proceeds is on OFS. So for entire capex, we are actually meeting out of our own internal accrual. As of today, we have a cash and investments to the tune of 270 crores. And that should be enough to take care of our total capital expenditure, what we propose in the next 12 months.
I'm highly optimistic because it's a brownfield expansion. What's the average asset turnover of a plant, or at present a blended asset turnover for you?
Today, we are at 5.6 times.
Okay, that's very good. That's very good. And if 5.6 times is on a greenfield legacy, but on this, what is the amount of sales you could generate at a peak utilization?
We should actually like after the entire investment, our asset turn should be somewhere in the range of 2.5 to 3 times. And maybe just to clarify, the incremental investment, what we are actually like making is actually identified for certain new products where the average realization per kg would be significantly higher.
Significantly higher?
Higher. So it's like, although it's an intermediate, the price per kg is significantly higher. So whatever capacity addition we are proposing, the realization, what will come out of this new additions would be significantly higher than what we already have at this stage.
Just to clarify, we are not forecasting anything, but I'm slightly confused here. If currently, last year or last 2 years, if the asset turnover was 5 or 6, between 5 and 6, 5.6, so then why the new capacities which are coming up at an assumed good utilization, they would be generating only 2 to 3 times?
No, including the existing, the total block after the new capex, we should be somewhere in the range of 3 times asset turn.
Okay. So if I just think in my mind that after investing 200 to 250 CR on the like how much you're investing, sir, in these capacities?
It will be close to 500 crores.
Close to, sir?
Close to 500 crores.
500 CR. Okay. So we actually are talking about between 1000 to 1500 CR at a peak utilization, maybe 3 years, 4 years down the line. New incremental revenue.
That should be our outlook, actually.
Yeah, basically if the utilization is peak, we can think like that. So that perhaps is sort of good, I think, which our viewers will take note of. In fact, the return on equity actually has been phenomenal. 50% 2 years back, 42% still, dropped to 26%. This perhaps I think our viewers will like to know why there has been moderation in the EBITDA margins, almost from 41% to 30%. As we reach 2023, must be a function of product mix. I think we'd like to know more about that. ROE also basically has come to 26%. Was there a sort of major fundraising, or it was a function of new products being entering? Like, please help us understand.
Okay, as far as the margin is concerned, between 22 to 23, there was a drop in gross margin, predominantly because of raw material price hike. So we have, you would have actually seen in specialty.
Yes, yes. Was it because of war? Because all the chemical prices just went to the almost roof.
Exactly.
Petrochemicals, chemicals, everything.
One of our key raw material we were importing from Europe, and that had a significant price hike. Partly we could pass it on, the other part we will have to absorb. And general chemicals also, there was a significant increase in almost all categories of chemicals. This had an impact. Also, the ocean freight increased between 22 to 23. What we are seeing in the first quarter, there is a trend reversal. We are actually seeing softening of the chemical prices, and with certain renegotiations, margins are healthy at this stage. We are actually back to the 22 levels, and we do expect 22 to have a higher margin. If I just compare Q1 23 versus 24, our PAT increased by almost 84%. The turnover went up by 25%.
Yes, yes.
The gross margin is actually back to the 57% levels, and we do expect this trend to continue.
Sir, I would definitely say there are no complaints on your ROE, because our viewers actually will always remember, we always talk on the show, anything which is 20% north of ROE is basically a blessing. You anyways actually are clocking 25, 26, 30%. So that itself tells you, as Mr. Singh was saying in the start, there is a moat in the business, because only you can clock healthy margins when there is a moat in the business. Just Mr. Singh, coming back to your point, why you're enjoying such a sort of good command on the market, why the competitive intensity is lower for your business? Help us understand more about that.
So the business is structured in 3 product verticals. They are not business verticals, I call them product verticals. Our first product vertical, which makes about 70% or 75% of the total turnover, is contrast media. Here, the global market is about 6.5 to 7 billion, growing at high single digit. This market has, the way it is structured, is dominated by innovator companies. And 75% of the market is clearly dominated by 4 large innovator companies. Now here, we supply the key starting material or the basic building block, as well as several advanced intermediates to the innovators in this product category.
All innovators?
To all innovators.
Okay.
I would say approximately all innovators in this product category. All the major players, I would say, in this product category. Then we have our second product category, which is the artificial sweetener, where we currently make one product, that is saccharin, which is the oldest artificial sweetener, been around for very, very long, and reckoned as extremely safe, and therefore we don't envisage any product life cycle risk as far as this sweetener is concerned.
But Mr. Singh, pardon me for jumping in between, but is it primarily because the way you have innovated many years back, it's hard for anybody to sort of innovate that chemistry? Is it something that's where there is a patent? What is the secret sauce in terms of competition not being able to decode a new product for that?
See, for our first product category, that's contrast media, that's a very, very closely held market. And the patents in this category had expired maybe, in the mid 1980s. After that, we have not seen any product which was patented, or we have not seen any phenomenon like you see in generics where you have a patent cliff. Nevertheless, you don't see any genericization. So it's a very unique segment, and the reason for that is that this is the medtech industry or precision care industry. Medtech becomes a part of precision care, and in this industry, there's a lot of drug device coupling that is happening. So the dye goes along with the device to be able to give a good image. So because of this drug device coupling, and because of the fact that the dye is injectable, so there are significant entry barriers. Similarly,
that's very important basically, because as you just said, device coupling, so that definitely creates a very strong antibody.
Yes, and the second part is that because the end use is imaging. So product quality and impurity profile are extremely important. I mean, even a slight deviation can produce some sort of a change in the image that the radiologist may not like on a screen and may impact efficiency and clarity of the image. So that's another part, which creates some sort of a stickiness in the business, extremely high stickiness in the business. If you look at our second product vertical, that's the artificial sweetener. There we are one of the largest players in saccharine worldwide. And we are not competing in the commodity part of the business. And as you mentioned, that there clearly is a chemistry play that's happening. I think we are one of the few companies which have perfected the process to the extent that our process does not produce any byproduct and is very green.
Oh, okay.
So this not only gives us, the satisfaction that we are not causing damage to the environment, but at the same time, it has a direct impact on cost effectiveness or cost competitiveness.
Absolutely. Margins, ROA, that tells the story. Yes.
Yeah. And we are focusing on FMCG, where, it is about taste, it is about taste consistency, it is about aftertaste, all of them combining to impart some sort of a flavor to the product that becomes a part of the brand identity, because this is consumer, because this is beverage. So that again, imparts a high amount of stickiness to the business. In both these segments, contrast media as well as the artificial sweetener, that's saccharine, onboarding is a very, very lengthy procedure. So when, any of our, customers have to onboard a vendor, there is a long process for that. Both these segments, it takes, 6 to 7 years to get your product qualified or onboarded, just because of the nature. On one side, on the medtech side, that's a contrast media side, it's about the image and the impurity profile. And on the other side, on the artificial sweetener,
Quality, the taste, quality, reputation, everything comes in. Not easy.
The
Absolutely.
second part of the chemistry that we are doing is that on the artificial sweetener side, we are controlling our impurity level in parts per billion. So that's the process efficiency that we have built in over our multi-decade experience about the particular product. So that's why we have been able to acquire global leadership in both these segments. And you would see, if you read the industry report that we have, the intermediates that we are in, we are have more than 75% of the market as far as export is concerned.
And that definitely explains why actually the margins are high and the return equity high. And I think this perhaps our viewers will like a lot from the perspective of understanding the business. And definitely, actually, it also implies that the growth story actually will look promising because there is enough entry barriers there. From there, coming back to Mr. Ganesh, perhaps my last question, and that would be the new capacities will come into FY25. Apart from that, is there any plans to enter with any new product or a sort of any new geographic expansion or any sort of new plans anywhere else?
No, as far as new product and geography is concerned, that's a continuous effort. As we speak, we work on multiple products with the multiple customers. So that's an ongoing effort. As far as expanding capacities in future, we are open to both organic as well as inorganic growth. So that's the way we look at it. And this IPO should definitely help us to target or give us that currency to do any such activities in the medium to long term.
Just to add to what Ganesh had said, on our contrast media side, where we make the basic building block and some advanced intermediate, we have a deep pipeline. It's a very robust pipeline that we have. On the artificial sweetener side, the ecosystem itself is not very big. You have just 6 or 7 artificial sweeteners. But there also, we are in the process of developing a couple of new products. On the third product vertical, that's a pharma intermediate product vertical, there again, we have a deep and robust pipeline focused towards the innovator companies and towards the chronic segment of, the therapeutic categories and towards the patented space.
Very nice, and perhaps we'll keep actually looking towards those products, new capacities, and I think as the growth story develops, and perhaps this is going to be an exciting story. I'm extremely sure. I think the IPO is going to be a resounding success after listening to you, and perhaps our viewers really like sort of this conversation from a view of understanding about the business. But from our side, from our viewers, we extend all the best wishes to you for a very successful IPO.
Thank you.
Thank you.
Thanks. Bye.
And dear viewers, with that, we come to the end of this conversation. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.